Nice to virtually meet all of you. I'm just going to bring up the slide. If you could just confirm if it is visible.
Yes, it is visible.
Lovely. So thank you everybody for joining in. I know July is a busy season with a lot of filings and other things, and we are probably about 10 days away, 11 days, whatever. So I thought I'll take you through this interesting topic. Thanks to the chamber for inviting me. And my focus is going to be both from a legal and practical aspects as well. What I will do in from a practical perspective is give you those sort of illustrations and examples, etc., so that you're able to figure out how it happens in the real world, right? Not that I will be able to bring up every possible log in this planet and show it to you, but at least give you scenarios what we have come across, so that you will be able to get actual perspective of how these audit trails or audit logs or whatever we speak of, right? And then probably go a little more into what are the nuances, what are the tiny aspects and things like that, right? So that's basically where we want to get started. And as it was introduced, I'm basically a chartered accountant. I specialize in technology practice and consulting, and I've found a lot of passion in this particular space. And I've been doing it passively for a significant amount of time. So quickly moving to this. A general disclaimer, a disclaimer that these views are personal, not of my organization, but just more from an academic and educational perspective, right? So first and foremost, what exactly is this audit trail? Why did this hangama happen? We are seeing and hearing a lot of these fraud-like situations. After Satyam, we have come across multiple such scenarios, right? And one of the things which people do in case of an accounting fraud is try to manipulate data. Today, everything is digitally maintained, isn't it? So how does one ensure that I am able to secure, safeguard, whatever I can call it, right? Only way which I can think of is, my dear friends, is having some verification mechanism. Let's take a simple scenario, right? I'm talking about you not being at your home or office for some point in time, right? It could be just overnight shift, or not being there for some time, or it could also be saying that, hey, I am not available for a week or 10 days, whatever. We obviously have that inherent fear with us. Is something going to go wrong, right? And what do? We either appoint a security guard, we in a CCTV camera, we try to do something tomorrow that, touch wood, if something goes wrong, at least I have a mechanism to go and figure that out. And that is where the entire concept of an audit trail came into picture. So an audit trail, right, in the context of the regulations, of the MCA, they predominantly focus on edit log. That's the wording. I will come to the wordings a little later. They speak about an edit log. Is basically a visible trail of evidence, which you are able to trace one-to-one as to what exactly is taken place, what is the input, what is the source. While it doesn't mean that every source to the destination I should have it, but it should have a reasonable way in which you are able to track that. If you are doing a manual entry, the beginning point for the system is you are passing a journal entry. Let's say in Tally, you're passing an entry, expense debit to cash. When you're passing this entry, you are actually looking into some document. So when you are looking into some document and you are manually passing it, the audit trail commences, the first transaction commences from you entering in the books. So it should basically track certain information from you. On the contrary, let us say your client is a company which is enabled with Swiggy, Zomato integration, Flipkart integration, and from there the information comes. It should say on this date or in this time the information has come here, and that's how I made the entry. Right, so that's basically what we are requiring here. So audit trail or an edit log is a visible trail of evidence enabling one to trace the information. Quite similar to that of a CCTV camera. What do we do with a CCTV camera? The whole purpose of a CCTV camera is tomorrow something goes untoward, I'm at least able to detect. And likewise, an audit trail is also a detective control, not a preventive control. Now, very important, a trail is a chronological record. It's a chronological. That means event after the other, one after the other, that has taken place to update any data. This could include creating the data, modifying the data, even deleting the data, right? And the records must be maintained as an audit trail. Normally, it has when the changes have taken place, who is the person who's done it, what was the date on which it was done, any other scenario, failure, correction, etc., etc. Let's take a simple scenario. I pass a sales entry, and then for some reason I wanted to, hide it, bring an element of disguise, or just delete it. I could go and delete it. This audit trail, it will indicate that, hey, I have not enabled that particular feature. Right? If the feature is enabled, then you can figure out what was the transaction, how it was deleted, what was modified, and things like that. So that's basically an audit trail for you, right? So an audit trail may be enabled. This is a very interesting thing. It can enable at multiple levels. It can be enabled at a software level, meaning at a Tally level or at a Zoho Books level or a SAP level, or it could be enabled at the backend level as well, which is a database. Especially these enterprise applications have a multi-tier. They call it as an application layer and a database layer. So the application through a service account goes and speaks to the database. But there could be some people who have access directly to the database. If it is extract, modify, alter, you have to be a little careful. So a trail is enabled at the accounting software level depending upon the features the software may have. Or sometimes it may be captured directly into the database. In essence, it is like the triple W approach. When, who, what. When it took place, who was the person who did, and what is the change which he or she has done. Okay? So I hope at a fair, high level, you've got an understanding of what is an audit. Now, let's see how this actually looks like, right? It could be something like this, but this is more of a trail, not of an accounting scenario. This could be a trail of, something on a file or something on a software, whatever. But it just has certain interesting things. I'm not saying every audit log will look like this, just as for you to get an idea. This is something which I just, picked up from the internet. It has a timestamp and a date, right? It has some sort of an action item. It has a username who's performed certain activities, some sort of an instrument details, area, description, and things like that. So basically a trail giving you this entire flow of these exercises, right? It could also be at a database where it could be something like this, where it says this is the user ID who's modified or created a job. And this is where it becomes a little technical for you to understand, right? So it could be on either ways. Now, but if I simply read this towards the last, so there's basically a job which was created to modify, or a job which was issued, and a job in a information technology parlance, we say a series of activities which is scheduled to take place on a particular day or a time, right? An example could be your savings bank interest gets calculated every quarter once, whatever date, or every month your current account interest is calculated on a specific date. So that's called as a job, and you schedule that job. So it's basically you have a job, modify, issue, create a table, and things like this. Now, enterprise grade companies, many of them said that enterprise grade companies, you need not, enterprise application softwares, if I'm already using like SAP, I need not to worry about it. But I think you have to be worried about this regulation for reasons which I'll come in the following slides. Let's look into, we understood what is an audit trail, but let's see what the legal context is. So what happened? The company's audit and auditors rules 2014 was amended, right? And the rule 11G, it says auditor to report on the use of accounting software which is used for maintaining its books, and that's the rule 11G. The extract goes like this: the auditor is supposed to mention for in respect of financial years commencing on or after April 1, 22. I've put an asterisk there because the rule 11G still says it is 1st of April 22, whereas a little later we'll also speak about the rule which is applicable from the company implementation perspective, where they say it is applicable from 1st April 2023. So basically, since the implementation is effective from 1st of April 23, auditor is required to report on 23 only, not prior period, which means if you are finalizing the books of accounts for 21-22, you need not be reporting for this, right? But nevertheless, we'll read this regulation. The company in respect of financial year commencing after this particular date has used such accounting software. So they're saying in case you're using an accounting software, which means if a company is using manual bookkeeping, this is not required, right? It is using an accounting software, it is required. Now, even Excel could be treated as an accounting software. So please be careful. So they're using everything in manual, I consolidate in Excel. It is still an accounting software, right? So has used such accounting software for maintaining its books of accounts, which has a feature of recording audit trail. And they clearly use the word edit log. That means they're more concerned about people who could edit a transaction. So the first time who posts an entry, normally a log is not captured. Why? If I capture in a log the first time the entry is posted, it is nothing but a duplication of that entry. Take a scenario, I have withdrawn from my bank account 5,000 rupees, or from, I made a check payment of 5,000 rupees. So the check gets honored or the transaction from ATM is reflected. Now, if I keep a log of that, it becomes very tricky. But that 5,000 rupees, somebody goes and modifies it to 3,000 rupees. That is the log which I need to keep, right? So it has a feature of recording an audit trail or an edit log. And the same, very, 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 very important. They speak about operating effectiveness. That means it should have been in existence throughout the period. It should have been in existence for throughout the period. Very important wordings. That means from 1st of April 23 itself, this has to be taken care. If you're already saying that, hey, first quarter is over, I'm not even sure whether this is done, then I think we are in a tricky situation, right? So it should have the feature of an audit trail from so-and-so period, throughout the period, for all transactions recorded in the software. That means for every transaction which is recorded in the software. Now you could say, sir, I am doing an accounting entry. Should I record it? The answer is yes. But if I'm doing, let us say, addition of a user, let's say my newly one employee has joined my organization and therefore I've given him an access. Should that also be recorded? From this legal context, it is not required, because all transactions have to be interpreted as all financial transactions in this context, right? So that's all the interpretation. So it has been recorded in the software, and the trail, very interesting word, has not been tampered. You would have seen most of these crime scenes in the movie where the next day police go and say, hey, we want to investigate the what? The CCTV footage. Now, the tricky thing is the CCTV footage. Most of the movie scenes indicates that, the negative protagonist in that movie has sort of, deleted or purged or done some mischief with that, right? So probably keep that in mind. So here it says the audit trail feature has not been tampered. That means we use this language in a computer parlance called worm, write once, read many. The audit trail should be only once written. You cannot edit the audit trail at all. Your transaction, you can edit it. Every time you edit it, you have an edit log, right? But the audit log should not be in a position to modify or delete it. I hope you are getting the context. So transaction, audit log, two separate things. Has not been tampered with the audit trail. Okay. And very, this is something which is a draconian provision, if you ask me. And the trail is preserved by the company as per the statutory requirements of record retention. It should be preserved by the company for statutory requirements of record retention. And what is the requirement for record retention? Anybody in the chat window, you can probably push it. In the chat window, anybody can push it. Yes. Anilji, yes. The law clearly says for 8 years. Thank you, Murliji. Yes, it says 8 years. That means your audit trail should be in existence for 8 years from the date it is first set up. So, if you are auditing the first year, no problem. The second year, if you are auditing, please check the previous year audit trail also is there. I hope you're able to get it. So until the 8th year, you need to keep on checking whether the first year's audit trail is there. And the first year audit trail is applicable from when? 1st April 2023. So which means 23 plus 8 until 2031. You need to keep a copy of this audit trail, and afterwards you delete it, archive, whatever. Now, bear in mind, some of the companies may say, hey, if I maintain an audit trail for such a long period, it will impact my performance. Absolutely fine. You can archive your audit trail. What is archival? What is archival? Like, for example, if you want to download 1 month's bank statement, you can do it. 3 months bank statement, you can do. If you want to download the full year bank statement, you cannot go in the normal menu. You will have a historical period. And if you go few years, maybe 2 years or 3 years backwards, in that case, it will say, we have placed a request, you will get it only after 1 hour or so. Or the transactions are huge, it will say after 1 hour or so. Why? Because it is not stored in the primary server, it is stored in an archival server which pulls it. The reason is, the more the data your server hosts, the slower is the processing speed. And therefore, it becomes very challenging. So if you archive your audit logs, it's absolutely fine, but the auditor should be given a perspective of where it is archived, how it is archived, so that you are able to test that as well. Are you clear? The other question which can come up is, should the audit trail have a backup? Currently, the law is silent. The backup provisions are slightly different, which is a different regulation. We'll bring it up maybe towards the end or towards the Q&A. So as it speaks now, audit trail with regard to backup of audit trail is a little subjective, but it may not be feasible for you to hold that much quantum of data in terms of a backup. But some of the organizations, what I've noticed is the primary server is what is getting backed up. So therefore, I'm guessing the audit trail would also be backed up in that scenario. But again, it's something we have to look into. Comes a very interesting question. Okay, I will take your question, what you have put in, Ronak. Whether are we required to report for the historical period? So I will probably answer that thing in the next slide. So just wait for me. So I think the legal context as far as the auditor is very clear. But what happens from a company perspective? And this is where this brings a very interesting text. The rule 3.1 of company accounts rules versus rule 11G of company auditors rules. They have a small divergent view, right? And I'll probably spend a few minutes over here, and you'll be able to get that context a little better. So if you read the proviso to the rule 3.1 of the company's account rules, it says provided for the financial year commencing on or after April 1, 2023. Look at this very carefully. They use rule 3.1 of the company's account rules for the financial commencing on or after 1st April 23. Every company which uses accounting software for maintaining of books of account, that means only if it's using an accounting software, please bear in mind, as I told, Excel is also an accounting software, right? In this context, for maintaining its books of accounts, shall use such accounting software that has a feature of recording audit trail of each and every transaction, creating an edit log of each change. Look at this. First, it should have an audit log of every transaction, and then it should have an edit log of every change. Very interestingly, look at this word. It says made in the books of account, and here the scope goes beyond accounting. Right? This is where the beauty of this entire perspective is. I know I am speaking a technological subject from a regulatory angle because this is a dual perspective. I hope you will be able to understand, right? So it says every company which uses an accounting software shall use only such accounting software which has a feature of recording audit trail. And you should also be in a position to create an edit log. For whom? For every change made in the books of account. Look at that wordings. Therefore, books of account, we need to go and refer what is books of account under section 2, subsection 13 of the Companies Act. We make a reference, we'll come back. And it says what? With the date of such changes were made, ensuring that the audit trail cannot be disabled. This is what the rule 3.1 says. The simplest way of interpretation is rule 3.1 is applicable for the management, not for the auditor. Why? Because company accounts rules. And whose responsibility to maintain accounts? Company. The corollary or the contrary of to this, rule 11G of the company auditor rules. So it has to have a corresponding impact. What happened was initially they have amended, this came up in their 2021 for information, right? Then pandemic, and they gave an extension of 1 year, 22, and again it got a one more extension, 23. But when the second amendment took place, only rule 3.1 was amended, rule 11G was not amended. So how do I interpret this? First, it should be made applicable to the company, only then the auditor can interpret, or only then that auditor can report. So therefore, technically, even though the auditor is expected to report for financial period commencing on 1st of April 22, because it is not applicable for the company for 1st of April 22, you could choose to ignore or you could choose to clarify this in your audit report. Both of them are accepted. This is what the ICA guidance says. So whether the company in respect of financial year commencing on or after 1st April 22 has used, look at this word, such accounting software for maintaining its books of accounts. Now, this is a little tricky thing. They said accounting software for books of accounts, which has a feature of recording audit trail. And the same as operated throughout. Very interesting is this word, because the management does not require this. The auditor will have to require this. Operated throughout the year. An audit trail has not been tampered. Earlier, they used the word disabled. Here, they use the word tampered. That means audit trail also should not be altered. Earlier, it was only not disabling, but here they say even tampered. And the audit trail has been preserved. This is the tricky part as per the record retention. So if you read this, which is the rule 3.1, I don't think there is a specific mention of record retention, whereas the accounts rule speaks about it. Because the auditor is required to report, the company is now required to maintain it, right? So combined reading, this is the scenario. A, 1st of April 23 onwards, audit trail is mandatory for companies. In which? In the accounting software and for all such software used to keep the books of accounts. Very, very, very important. All such software for books of accounts. So I'm using an invoicing software. You need to maintain this. I'm using a payroll software. You need to maintain this. I'm using a third-party payroll software. You need to maintain this. No option. I'm using a procurement purchase, procurement ordering the solution software. You need to maintain this, right? And has not been tampered, and the audit trail has been preserved for the company as per the statutory requirements. Are we clear with the fundamentals, right? So both the scenarios, this has to be maintained, right? But let's quickly look into it. Why does obligation come into picture? Globally, I don't see such requirements at all. So it's one of its client. I would say globally, even though directly they have not mentioned, indirectly as auditors they used to verify this, but there was no reporting obligation. That's a major shift, right? So that's basically one of the few considerations. So globally, no similar reporting obligations exist. Please bear in mind. Auditor is expected to perform procedures based on your standards on auditing. Typically, this includes inquiry, observation, examination. We'll come on to this procedures a little later. Right? In the meanwhile, there are a couple of questions which is common. In case of a small private limited company, accountant enters all the entries at that time of the year end. What do we report? You have to report whatever is there. So this is where the tricky part of it. But bear in mind, nowhere the law said you need to do monthly accounting in the same month. Did they say that? No. Right? So if it's a smaller company where the accountant has entered all the data in the end of the month, so be it. He's entered in this financial year the summary of the transactions for the previous financial year. Okay. Just is that A, is an audit trail there? Yes. B, has it been altered, edit? Yes. Now, as an auditor, your review procedures will come into place, asking why this cannot be entered on a regular basis, ongoing basis, and things like that. Those are secondary questions. But as an auditor, are you okay if somebody enters everything at the end of the year? At the end of the day, you're expressing an opinion on the true and fair view. You're not bothered about when the data is entered. in this context. Now let's take another context. You're talking about a listed company which is doing a quarterly, monthly compliance, and then they do an after the year entry, then this may probably be an area of concern, right? So I hope I've answered your question, Dilip. During the audit of FY23, all changes to FY23 are done signing of balance sheet. Then these changes will cover financial year 23-24 or not. Since transaction is relating to financial 23, accounting software is under SAP. Rajesh, I think I clarified this applicability 22 and 23. Just to reiterate, 22-23 audit trail requirement from a company perspective is not mandatory. Auditor, even though, can choose to report if he wishes to. But however, 23-24 onwards, that is financial year beginning from April 1, 23 onwards, mandatory, you need to look into it. In CBS, are you supposed to maintain for eight years? Yes, this is the unfortunate thing. The audit trail has to be maintained for 8 years. So this is actually a very, very major initiatives, right? So that's where it is. Is audit trail required for Excel spreadsheet where manual generated entries are maintained? Unfortunately, yes, because for the purpose of this clause, anything which you're maintaining digitized, right, you could treat it as an accounting software, because at the end of the day you're using Excel. Excel is also an accounting software. I mean, it's a spreadsheet. In this context, it will be treated as an accounting software. So if my Excel does not have audit trail, you will have to enable that. How do you enable that? You'll have to maybe configure a macro or create a file. Whoever passes in this file is sort of done, because in Word you at least have track change. In Excel, I don't think you have that sort of a facility, right? Unless your Excel is hosted on a online version, then you might have, but again, there are certain limitations when it comes to Microsoft, right? So that's typically how we could probably look into it. Moving further, what are a few special considerations? The accounting software may be hosted maintained in India, outside India, maybe on premise or cloud, SaaS software, it doesn't matter. You need to mandatorily ensure compliance. So in these cases, what do I do? Because I am not maintaining it. You have to ask the vendor to maintain it. Failure of the vendor to provide the details, your auditor could go ahead and qualify. Right? Qualify meaning qualify this particular point, saying that the audit trails are not maintained. That's all. But the regulator may probably look in a different angle. Hey, you have not enabled audit trail. That means you're trying to hide something. So that could be another view of it, right? So accounting software may be hosted and maintained in India, outside India, and all of this. So one very interesting point many of them were asking in the recent past wherever I've interacted. They said, sir, now all financial records should be maintained only in India. No, the law did not say this. Somewhere in August 2022, remember this very important point, and this is a reporting requirement for this year. August 2022, somewhere around that time, the regulators came up with MCA came up with an amendment. This is basically with the backdrop is, QuickBooks decided to take out this business from India, and therefore obviously all the business in all the data QuickBooks had was hosted in the US server. I don't think QuickBooks had an Indian server, to the best of my knowledge. I may be corrected, but the risk basically the government realized. And today we're talking about data sovereignty. That is where I have my data, in which country, who has control over the data. So what the RBI said, or the regulator, SEBI, IRDA said, all my regulated entities should have data only in India. Right? That is called as a data localization. RBI, SEBI, IRDA, NABARD, all these people came up with some sort of similar requirements. But now how do I enforce this for companies? And for companies, it may not be practical also. So what the MCA came up with is in August 2022, and it came with immediate effect. Remember, it came with immediate effect. In fact, the audit trail regulation at least had some time. The data localization, or the so-called localization, what is that localization? I'll explain. This came up in somewhere in August last year, and it came up from immediate effect, right? To be very specific, I think this regulation came from 11th of August 2022. 11th of August 2022. You can probably just go there and read it. So what is the regulation saying? It says the accounting software, in that context, right? The August 11, 2022. What it says is the books of accounts should be, remember again, they use the word books of accounts, should be accessible from India at all times. That's all this. Right? It should be accessible from India at all times. That means throughout the year, it should be accessible. How do you prove it is not accessible? That's an interesting question. Second, very, very important. This is the crux. They said backup of books of accounts should be taken on a daily basis and stored only in India. Are you with me? Backup of books of accounts should be taken on a daily basis and be stored only in India. Right? That is the requirement for backup and data localization. That means, can I have my accounting software in Ireland? Can I have it in Antarctica? Absolutely fine. As long as you're able to access it from India. And that is on all times. So what is all times? How do you measure all times? Those are subjective interpretations, right? But the backup has to be made mandatory in India, and this is a reporting obligation for companies for last financial year only. Many of the companies presume this requirement is also from 1st of April 23. And many companies having global subsidiaries, what they started doing was they said, hey, I will have my global data center in US, Singapore, etc. And the backup is also taken there, but the backup is taken for the company or the group as a whole and not for India entity alone. So if you ask them to show compliance under this backup regulations, it's a little tricky thing. I know I've deviated from the topic, but I thought it is relevant to clarify because many of them are asking this question. Okay, now coming back, we're coming back to audit trail, right? The backup and data localization is already made effective. Maybe we can have another separate discussion for that, or maybe towards the Q&A we can discuss, but let's stick on to audit trail. Now, second, many of the companies in India outsource their accounting work. And such outsourced organization also has to prove this audit trail requirement. If the outsourced organization or to whomever you have outsourced, that is called as a service organization or service provider. The service provider or service organization is using his or her own software, you need to demonstrate that. If the service organization is using his or her own software, you need to demonstrate. If he's using another external third-party software, you still have to demonstrate that that external software is having these features. And what are those features? Audit trail features. Right? Now, classical example, payroll process is outsourced. Many of the companies do that. The payroll software should have an element of audit trail from 1st of April 23. If any changes have taken place, this is something which will come into the picture. Why? Because of this fundamental definition which I want to explain. Probably I have, not sure if I have missed that slide. Yes, I think it's there in the next slide. The definition of books of accounts. The books of accounts includes what? It includes records maintained in respect of all sums of money received and expended by the company. And matters relating to receipt expenditure take place. So invoicing software is covered. Receipt, if you're having receipt generating software, it's covered. If you have an expenditure generating software, it's covered. All sales purchase of goods and services by the company. Right? Now, whether your procurement software will get covered, I think yes, because purchase of goods, right? Sir, I'm using 3-4 procurement softwares, no problem, everything gets covered. Sir, I am using a software for tracking my fixed asset register. Yes, covered. Even my fixed asset register should have those things. I am having a software for tracking my liabilities. My friend, it's required. And the fourth one, the items where section 148 there's a prescribed. 148 talks about central government prescribing certain category of companies where cost records you need to maintain, which I think most of you are aware, the cost records maintenance section, right? I'll just pause over here to just give you or digest this fact that, hey, we're talking about so many things. We're talking about an audit trail, we're talking about an accounting software, we're talking about a books of accounts, right? So just to quickly give you another refresher, I know we've spoken of a lot of things. First, effective 1st of April 23, audit trail mandatory for companies using a computerized accounting software. This extends even for all books of accounts. Definition of books of accounts, I've shown it to you. The requirements are simple: enable audit trail, enable edit log. You should not have a feature to disable, and the audit log should not be tampered. And very, very, very important, retain for a period of 5 years. Right. So I think that's what the gist we are speaking of. So now question is, what should the auditor verify? Right. That's the very fundamental question. Sir, what do I verify? And this is what it is. Verify whether the audit trail is configurable. See, some organizations or some softwares, rather, some softwares that use, they have a feature where you can configure the audit trail. Meaning, you can enable audit trail or disable audit. That is the first thing which you have to verify. For example, Tally is set up in such a way that you can go ahead and configure the audit trail. Because for small companies who are non-corporate companies, maybe this is not necessary. Right? So whether audit trail is configurable, that's the first thing which you have to check. How do you check it? You'll have to go to the master configuration settings, or otherwise speak to the software vendor as to how the software captures audit trail. Is that something which the client can disable, or who can disable? And by the way, if it is disabled during the year and re-enabled, even for such a period, audit trail is necessary. This is a very interesting thing. I can go and disable an audit trail and again enable it. Right? So if I disable an audit trail, I do all the mischief and again I enable the audit trail. How do I get to know? So if the audit trail can be enabled or disabled also, you require an audit trail. In other words, you have a CCTV camera to look at a CCTV camera. If, just in case somebody comes and do a mischief with it. I hope you're getting the context, right? I'm just giving on a jovial note, but I hope you got it. Next, very important. Was the audit trail enabled and did it operate throughout the year? Throughout the year is a very important wording. Whether all transactions recorded in the software are covered in audit trail features. Very interesting. Whether does it cover all modules or only select modules? Right? Whether it is all modules or only select modules. Correct? Because the law says, or the other requirement says everything. Next, whether it has been preserved as per the statutory requirement. And as I said, every software used to maintain books of accounts will be covered, and the books of account definition we'll have to look into. Right? You will have to check what is called as edit log also, which is in each and every change made to the books of accounts. Next comes a very interesting question. Sir, MC has given a lot of requirements. In case of MCA, there are a lot of requirements, and in all these lot of requirements, private limited companies are exempt. Small companies are exempt. Unfortunately, this requirement, no exemption. All companies, kalas, full stop. And this includes even Section 8 companies or erstwhile Section 25 companies. It is applicable even for foreign companies. Very interesting. When I say use the word foreign company within the MCA requirement or within the companies act, right? That means if Microsoft is reporting for Microsoft US business, does not replicate, right? We have to understand Microsoft in the context of definition of foreign company under the Companies Act, right? I hope that you will be able to, draw the logical conclusion. Now, this is a very interesting thing. What happens in case of consolidated financial statements? Even in that case, it is applicable because you are consolidating based on the Indian legal requirement, right? So obviously it is applicable. However, if there are certain components outside of India, components meaning it could be subsidiary, joint venture, whatever association, those stakeholders, if they are outside of India, then my dear friends, you could exclude them, but you need to mention that. I'll speak about the reporting requirements towards that, right? So in short, the moment you are a company, you have no other option but to do this, right? In fact, I heard a lot of people saying that, sir, we will go and incorporate LLP because, this is a tricky thing and etc. As of now, I'll tell you another interesting thing. The MCA did an interesting drive, right, where they removed all the companies which are not filed for 5 years or so. Now, those companies which are not filed for 5 years, but they had directors who are common between LLP and company. I don't think MCA has removed that. So they're still figuring out how they could give the benefits of LLP, but people don't want to be misusing that LLP. So people are still probably looking into it. Maybe MCA might come up with an amendment saying for LLP, the following clauses of company is also applicable. We do not know. Let's wait and watch. But as you speak now, this is what is the same. Right? Now, how do I keep a track of it? Because I have so many softwares, right? I'm using it for so many XYZ random purposes. And this is a small format which, you could use it. You could add more columns. In fact, in our office, we use much more columns over here. But this I picked up from the ICA guidance note, where you talk about the name of the software, what is the record or what is the purpose, what is the hosting location. There's an interesting thing. Maintained in-house or outsourced. Where is the database, right? Where is the database hosted? What is the operating system used? Is the audit trail is enabled or not? So this is a simple illustration format. You can probably pick it up. And this is an example of a table which you could probably consider. So I'm talking about SAP. It used for journal entries, subledgers, general ledger, whatever. Company data center, it is stored. Whereas PQR, it is hosted on a cloud, right? So if it is a cloud, please mention the hosting location also. So many of them say, sir, it is hosted on cloud. Please understand there are a lot of nuances within the cloud. But in a layman's language, if I have to say, if your client or the auditor or auditee says, sir, it is hosted on the cloud, please understand two models of cloud deployment. There are three models, but here we'll focus only on two, right? How is cloud served? A cloud can be served in three models: infrastructure as a service, platform as a service, software as a service. The most popular mode is software as a service, SaaS. For example, the app called Zoom, which you and I are using, is software as a service, which all of us are hearing through is a software as a service. Did I pay for the software? Yes, the chamber has a paid subscription, and you and I as users are just making use of it. That's it, right? Do I have the infrastructure? Do I have the hosting? Do I have the permission? Nothing. Your device speaks with the Zoom app. Zoom app in turn takes all this information and transmits. So that's a SaaS solution. Assuming Zoom was a accounting software in this case, Zoom will have to demonstrate where it is hosted the data, whether audit trail is enabled or not. Are we clear? Scenario number two. There could be situations where companies have decided not to have their own data center, but rather go to the cloud. What they've told us, hey, I will use Microsoft services. I will use Azure cloud. I will use Amazon services, AWS or a GCP. Of course, Amazon and Azure are slightly more popular compared to that of a GCP in this context, Google Cloud. What they do is, instead of they having a physical data center in their office, physical servers, they buy some space on the cloud. In simple language, understand you having a mailbox. All of you are aware of a mailbox, right? A PO box. Understand like you're having a PO box, but where that PO box is physically located is very important for you. Inside the PO box, you will do whatever you want. To give an example, sir, I have a bank locker with XYZ bank located in Assam. Or I can have a bank locker with Switzerland. Now, inside that, what is hosted is none of the Switzerland bank or XYZ bank's responsibility. It is your responsibility. So I could have a cloud storage in Azure or Amazon Web Services, etc., hosted in different countries or even in India, and I have hosted my SAP in that. Clear? Or I have hosted my NetSuite in that. But in this, the infrastructure belongs to whom? The Amazon or Microsoft. It does not belong. Of course, the billing will happen by this organization. So in this case, please verify where that infrastructure is hosted. In India, most of these bigger players, Google, Amazon, Microsoft, have their data centers only in Mumbai. Amazon has recently opened in Hyderabad in the last 3 to 6 months, but whether it is fully operational, we'll have to just. Are we clear with this? So those are essential requirements. Now you could have a third scenario, which is a very, very strange case, right? And I'm seeing some companies coming up with this. The company is rendering the service as software as a service. The company is rendering the service as a software as a service. When the company is rendering it as a software as a service, meaning you subscribe, you use it like Zoom, right? They can host that anywhere they wish to. They can have their own data center and host it. They can host it in Amazon. They can host it in Google. They can host it anywhere else. So you have to be worried and concerned even about that. This is where it becomes very tricky in this cloud setup. Right? So if I have to probably illustrate, let me bring up a small chart so that you are able to understand how this entire cloud model works, right? Just give me a minute. I will bring up, of course, there's a different presentation, but I just thought it will be handy for here for you to get a perspective of how cloud looks like. Right. Of course, if you have any questions, keep them coming. We will filter it through, and then wherever there is a requirement, we will bring that up, and then we will decide that. Right. So I am just going to bring up one other slide. Give me one moment. I'm sorry for the delay because this is an old slide which I did it long back for one of the organizations where we were doing. In fact, I do a lot of technology-based elements audit. So you would have realized by now what is how it works like. Nevertheless, thought worthy to mention it out here. Okay. So how does the cloud operate? Maybe the slide should give you some clarity. Let me know once you can see this wonderful or the colorful slide. Right? So this is how a cloud operates. It follows three models: IaaS, PaaS, and SaaS. For our purpose of our discussion, we will ignore PaaS. We will only focus on on-premise. Right? And this is where it becomes a very tricky situation. Hopefully, I'll be able to clarify the questions and context. If you have server and application, everything hosted in your own premises, right? It is called as an on-premise. That means you have a server room, you have everything which is hosted on the left-hand side is in your own office. Now, some organizations may choose, sir, I don't want to do this. I will go to a data center and host it. Right? I'm repeating, I will go to a data center and host it. In that case, instead of this being on-premise, this goes to a data center. That's the only difference. It goes to a data center. So I will use the word DC, right? And this DC could be a shared DC. We call this word as co-location. We use this word as co-location. Colo. Sometimes people use, IT guys call it as a colo. It's basically co-location. That means it's located somewhere else. A classical example is, your CP data center, your Airtel data centers, your controllers data centers. All of these are on. So these are within India. Therefore, invariably, you are meeting these requirements, right? So no problem. Now, when you look into IaaS, PaaS, and SaaS, this is where the trick is, right? When I use the word IaaS, the cloud service provider is responsible for what? Virtualization, server, networking, storage. This is the cloud service provider. And this is what Amazon does. Amazon does only this major thing. AWS or Azure, they do this. Right? So if you're talking about somebody saying, sir, our software is hosted in Amazon, please ask them what is the deployment model they are following. Because you could be a software service provider only providing this layer. This is what SaaS companies do. And you could have the data hosted in Amazon Azure. Right? So please be very cautious over there to understand the interplay between all of this. So the simple thumb rule is there could be 4 to 5 broad scenarios. Scenario number 1, you have your own on-premise software. Scenario number 2, you have this hosted in a data center, also called as co-location. Scenario 3, you are hosting it in a infrastructure as a service, something like an AWS or an Azure, where you are in charge of maintaining all of this. So mostly the legacy applications like SAP, etc., this is possible. Scenario number 4, you are in touch with a SaaS provider. The SaaS provider owns the accounting software, but he is hosted the virtualization, server, storage, networking within the Amazon or Azure. The last scenario, The SaaS provider itself owns the entire thing. That means the SaaS provider itself owns this entire stack, including networking, storage, and virtualization. Please get the difference. For example, if you go to Zoho Books has their own stack, have their own data center in their own premises and things like that. So therefore, if you go to Zoho Books, they are a typical SaaS with everything ownership under them. If you go to a company like Zero or any of those, I am not sure, they may, I'm not sure. I will give this with a small pinch of this thing. Assuming they only own the SaaS solution, they may be hosting in AWS or Azure. I hope you are clear with this, right? In all these cases, the audit trail requirements is only on the accounting software. They are not really bothered about the downstream where it is hosted. So don't worry about it. But for data localization purpose, you should be worried. Or backup localization purpose, you need to be worried. I hope that's clear, right? So this is just an end-to-end responsibility of this. This is a publicly available document. You can read it later. One of the other questions which came up is, sir, what if records are not in electronic form? Right? What if the records are not in electronic? Not applicable. But question is, the moment you put any transaction into a balance sheet P&L account, even into an Excel, I think it becomes electronic. So I think there's a very, very peculiar case. I think, not applicable is very difficult for us to identify. Right? But even though they say the books of accounts are maintained entirely manually, the assessment and reporting under 11G will not be applicable. So go back to the old system where they're writing it, take the summary, post it, and that is signed. Maybe yes. I can still have a manually prepared balance sheet and P&L. Nobody's stopping, right? Nobody's stopping, right? But nevertheless, we have to understand the practical nuances. This is what I told you, the draconian provision. Preservation, the preservation under section 128.5 is for a period of 5 years, right? So it's a little tricky thing. So preservation is for a period of, beg your pardon, 8 years, 8 years. It'll start from 1st of April 23 because the rule was amended. So from 23 plus 8, right? That's basically typically 31 or whatever that period is. Now, what is the responsibility between management and auditor? Right? Even if you look into internal financial controls, this topic was brought in. What is the responsibility difference? So first, the management, because many of you are sometimes even doing as a part of the virtual CFO services, you are doing accounting work. So in this case, your responsibility is this indirectly because the client is designated that to you. So in that case, you should ensure that using an accounting software, and that software has a feature of an audit trail, and it should not be disabled. Right? Even if it is disabled, there should be a mechanism where you figure out how, who is disabled and how it is. And this, it includes for every books of accounts. I think as we already spoke about this. And they should have an edit log. The changes should be captured. Right? The management is also assuming the primary responsibility for books of accounts under section 213. I think I already told you. And this is where it is interesting. It is for all of this. It's a little broad perspective. I have my reservations of this, but the management has to, as a management, they are responsible for this, for the entire IT environment. Any application they use, any web application or web portal they're using, any database, any interface which is sort of connecting, speaking, any data warehouse, right? A data warehouse is an extracted version of the data, right? Any data lake which is there, any cloud infrastructure which is there, or any other IT component which could be there. So in all of such scenarios, it could probably come into picture. Right? So hopefully you have got clarity on what we have spoken. Right? I know there are some questions coming and some questions, the organizers are moving it based on what we are discussing. If there is still something, we will pick it up. Right? So ensure the audit trail captures changes to each and every transaction. Right? When the change was made, who made the changes, and what data was changed. I already told you the triple W approach. Right? It should never be disabled. It is applicable even at the database level. This is a very, very important thing. Right? This is a very, very tricky thing and very important thing. So auditor, you'll have to verify this as well. Even at the database level, whether this is there. Right? And it is appropriately protected from any modification. So that means your audit trail should be safeguarded. Right? And this is operating effectively for the period. So that is what we sort of discussed. Now, as management, what are the controls you could consider implementing? So first, a control you could, because many of the organizations say, they prepare RCM. So in your RCM, R to R process, record to report process, this is a new risk which you have to add. If you have not added, please add it and please charge the client, right? So what are the controls? You should ensure an audit feature has not been disabled. Define risk controls for that. Ensure user IDs are assigned to each individual and user ID is not shared. Very important. Why? Because if user ID is not assigned to each individual, I do not know who will do the transaction. And this is where accountability is very difficult. And therefore, please review the list of users and identify if there are any generic users. Remember, in softwares like SAP, also you have generic users. Those of you in SAP and other things, generate a report called USR02. You will get the list of users, figure out who are the generic users, have those passed any entries, right? Look into users like SAP Star, DDIC, and all those things. These are privileged accounts. It's coming. Next, check if there are controls that the changes to the configuration of audit trail are authorized. This is a very interesting. If I passed an entry, I want to make a modification. The law never said that you cannot do the modification. Please understand. You're okay with the modification. An auditor has to review that modification so that he gets an idea if there's not a fraudulent case. So therefore, if that change is taking place, you need to have an approval workflow. Somebody reviews and approves, and only then it is recorded. And the same is mentioned in the log. Right? Sir, in my software, there's no feature of a maker checker, but I can enable whenever who has done the changes. No problem. Please go ahead. Right? Control to ensure access to audit trail and backup is disabled or restricted access logs. Whoever has, this is what I said, audit trail of the disabling of the audit trail. Right? So that is something which you have to look into. And controls to ensure periodical backups of audit trails are taken and archived as per statutory requirements. I think we focused on this. Now, software provided by service providers, in that case, what do I do? Because if it is a software like NetSuite, right? Or if it is a software, and by the NetSuite, I think is a Microsoft product, right? So in case of NetSuite, they are hosted the software, NetSuite is an Oracle product, beg your pardon. Navision is a Microsoft software. Beg your pardon. NetSuite, which is an Oracle product, or a Microsoft Navision. In all these cases, they are hosted in Oracle data centers or Microsoft data centers. So please double check how this audit log has been enabled. Some of these companies are still taking time to figure it out, right? So please be a little careful, because when you're doing the audit this year, please suggest or speak with the management, because you'll be reporting this next year. And it should not be a case where they say, sir, right? And if you're using those sort of situation, preferably take a SOC 2 report or an SSAE 3402 report. A SOC 2 report only an AICPA can sign. SAE 3402 based on the auditing standards, either a chartered accountant can sign or a ACCA can sign, or whoever the designation person. But please be very careful of this. In fact, we are doing a lot of engagements where on behalf of clients, right, or on behalf of service providers, they're asking, sir, because of these requirements, please come and certify us. So we are doing an entire SOC exercise. In all of those, right, please ensure there is a compliance of audit trail. Just obtaining a SOC report is not sufficient. In the SOC report, there should be a separate section called compliance with audit trail. It could also be a SOC 1 report also, that is also fine. SOC 1, SOC 2, what is the difference? You can search my YouTube channel. I've explained all of those things, so I'll not get into that. Right? And it should cover maintenance of audit trail and lines the requirement of that. So this is in case of a service provider. Sir, then comes an interesting question. Sir, I'm doing an accounting service by using Tally for 5 companies. In that case, what do I do? Do I have to go for this? 2 scenarios. You could go for a SOC report, or you could give the actual configuration to the auditor of that company and say, sir, this is what we do, and this is how it is configured. Right? So that will serve the purpose. Sir, in that case, how do I meet the backup requirements? I told it's another clause, but nevertheless, just thought I will throw some light. If your data is hosted in your office, you are doing the accounting services for a company, you need to demonstrate that there is a daily backup system of Tally. So Tally has an auto backup feature. Is that considered sufficient? No, it is not considered sufficient, because Tally's auto backup feature, the backup gets stored in the same folder itself. It's not in a different folder. So that defeats the very purpose of a backing up system, right? So if you're able to demonstrate that is backed up on a daily basis in a different location along with audit log, then your August 11th, 2022 circular, you're compliant. Here is a different requirement, is only focusing on audit trail. So a few considerations, I think, whether the software has a feature of enabling, disabling, who has access to that master. This is a very interesting thing. Who has access to driver's seat, or who has access to the cockpit? Because in the cockpit you can go and make the changes, right? Entire thing goes for a check, goes for loss. So any changes to audit trail configuration during the period of audit, right? During the financial year, also from the date of financial statements before date of audit report. Events occurring after the balance sheet date, subsequent events, and all those, accounting standards, right? So accounting and auditing standards. So be a little cautious there. And is there a review mechanism implemented and operated by management in case the audit trail is configured or changed? Is there a maker checker reviewer mechanism? Those are all interesting things as auditors will have to look into it. Next, very important, is the completeness and accuracy of audit logs or edit logs taken care of? This is a tricky thing. They could have said that, sir, we are only doing it for sales and purchase. Is there a valid justification why they're doing all of those? You'll have to look into, right? You have to look into it. And whether it captures the user ID that made the change, the date, time, you will have to do a test of operating effectiveness here. You have to test check some of the audit trails on test basis, right? It's a little tricky thing. In fact, we are writing audit programs for this now because that's how these things have come into picture. For some of the larger clients, we are finding it a little hard because they also are not clear on what the requirement is, and it's taking a substantial time for us. But nevertheless, I think this is a requirement we have to meet it. Has the management performed any test to complete the accuracy and completeness? This is another interesting thing, management to give a confirmation. Please note the auditor reporting requirement is only one, but for an auditor to draw that conclusion, all these are the steps, right? Auditor may review on a sample basis audit trails and records, and if some modification is there, how it is done, retrieve it. Hey, show me the audit trail on so and so date, or show me the edit trail in case something has taken place, right? All of those. So let's say next year, best case scenario, an organization says, sir, nothing is there in our audit trail. You ask them, okay, fine. How is the audit trail configured in the first place? So generally they will say, sir, if the original entry is passed, we don't configure an audit trail. For an edit transaction only, we configure an audit trail. That is absolutely fine. That's absolutely fine. Why? Because for the original entry, the entry itself is acting as a trail, no? Because it has maker, checker, name, and details. One very interesting thing in ERPs, we use these three words. Remember this, and this is very, very important. In ERP, I missed mentioning in the slide, but I just recollected here. In ERP, there are three things. One is called master, second is called transaction, and third is called configuration. Master, transaction, configuration. An audit trail should be for all the three. This is again an interpretation based on my practical experience. This is not something what the law says, right? Because at the end of the day, audit trail is required for books of accounts. Now, what is a master? A classical example of a master in the case of an ERP or in case of this thing is a vendor bank account details is modified. That's a master, right? Vendors employees bank account details are modified. That is also a master. So if those bank account details are modified, audit trail is mandatory. That's called at a master level. Second, at a transaction level, I passed a journal entry. I'm now modifying that amount. Even in that case, it is necessary. Third, very important is what did I say? Is that the configuration. What is the meaning of configuration? Configuration refers to I have set up the audit trail or the system in such a way. This is how it will work. If any changes happens to this, also I need to take an audit trail with that. But if it is financially relevant, you verify. If it is not financially relevant, you need not bother. Meaning, for user access grant, there is a table. I go and click grant access to ABC user. And then you gave him 2 access rights. Little later, you gave him a third right. He was able to do only balance sheet and P&L account. He didn't have access to cash flow. You gave him that permission. This is a modification of existing user right. So the expectation in a general parlance of audit log is that you need to maintain a log even for this. But from an MCA compliance perspective, you are not required because it is only relevant to a books of accounts and which has a financial implication. By adding user, I don't think you will have a direct financial implication. Therefore, it is okay, right? The same configuration settings for a depreciation master you're changing. For example, some of the organizations have a depreciation auto calculation schedule. There you go and change the period, the number of years, date, etc. Then it is applicable. Sir, I'm using fixed asset register in Excel sheet. 99% of us use that only. Fixed asset register in Excel sheet. Unfortunately, this audit trail is required for that as well, right? So how do you do it? It's $1 million question, especially fixed asset register, because generally what happens, the FAR register in books is always at a summarized level depreciation. We don't maintain asset wise. It's a little tricky thing, but we have to probably explore how. So I think we are almost coming towards the end, because I think we have planned the session for an hour and a half. A lot of interesting thought process which is there. I just thought I'll give you a perspective of wordings for the reporting. And this again, I've just taken it as it is from the ICA guidance note, but I thought I'll give you my value addition to it. So in case of a standalone financials, you will say based on our examination, which includes test check, the company has used an accounting software for maintaining books of accounts, which has the feature of recording an audit trail. Within bracket, edit log. Always use that word. And the same has operated effectively throughout the year for relevant transactions recorded in the software. That is the wording. And very important, you could also mention that we have not come across any instances of audit trail being tampered with. It is suggested, even the institute says within brackets, but I suggested additionally, audit trail has been preserved by the organization for a minimum period of statutory. So my suggestion is please mention these three. The first two is what the institute mentions. The last is also institute has said suggested. So please go for it. In case of a consolidated, slightly similar, you will write based on our examination, which include test checks that performed by respective auditors of subsidiary. Very important. So holding company or the auditor, subsidiary company, somebody else is auditor. Check whether subsidiary company auditor has reported that. And if it's a material and things like that, right? Associate, joint venture, joint operations, which are companies incorporated in India. Because company incorporated outside India, not applicable. Right? Whose financial statements have been audited under this act, then the company, subsidiary, associate, joint venture, ... has a feature of audit trail enabled. Right? And we came across no instances where this was not there. In case of a modified reporting, you use the same wordings, but you use the word except for the instances mentioned below. Based on examinations, etc., except for the instances below, we noticed in all other cases, it is applicable. Same like how we report under SA 700, the same requirements comes into picture. And you can prepare a table like this if you want to modify this table. This is like a thorough reporting where you talk about those tables, clauses, etc. Absolutely fine. You are free to go ahead and modify this. Instead of accounting softwares maintained or did not operate, where audit trail is being tampered, where audit trail is not preserved, or audit trail was delayed and made applicable, or audit trail was configured only from July 1st, 2023. All of those things are absolutely fine. You go ahead and mention the modified. In terms of configuration, some of you, I've just given two URLs. This is anyways the slide. I will probably see if I can share this with you. Tally Prime alone has a feature of audit trail. Tally ERP9 does not have. And for those of you who are aware, Tally has got both Prime as well as ERP. Both of them are actively running with the same license number. You can use both, right? That's how they say. At least in the multi-user is possible. Single user, you may probably want to check. In case of Zoho, by default, this is implemented. These are two examples which I just picked up. There are hundreds of other solutions which you can probably go through and see. And we have our ICA guidance note. This is also published in March 23, a good piece of publication. I think some 35 pages only, ignoring the extra GAN and other things. I think summarize the entire publication to you in a gist so that you're able to understand it, what it is, right? So I think that's what I wanted to give you a perspective. Thank you so much for this opportunity. I know we have question and answers and we have about 10-15 minutes. I kept it just and I kept it to the point, and as much as possible I gave you illustrations, but happy to discuss more in detail, etc. We are from this organization called Ken & Co. I'm a partner here, and we are based out of Bangalore, and we also have a entity in US, CPA firm in US. We predominantly focus on these sort of things where technology, risk, consulting, audit, SOC, SSA 3402, etc. And this has given me some bit of a perspective of various things what we can do for clients and other things. But yes, these are my contact coordinates. Happy to take questions and anything. I think we had about 90 to 100 audience, and I'm glad that most of them were glued on until my thank you slide, and hopefully you were listening to it. Happy to take a few questions in case if I've not answered it during the course of this discussion.
Yeah, Deepak, can you take up the questions?
Yeah, sure. So one question is, in case of branch in India of a foreign company, books are maintained outside India, whether this regulation is still applicable?
Okay, so first question is, the branch which is in India, is it a foreign company within the meaning of Companies Act? And are you doing the reporting? That's the first question to look into, because if you see the definition of foreign company, of course I'm not a company law expert, but definition of a foreign company, they say if it is used for address of correspondence or for certain liaison purpose, etc. That is how they have defined. I think section 2 subsection 42 defines a foreign company. It is worthwhile to have a look into it. It says it has a place of business in India. I mean, a foreign company means a company or body corporate incorporated outside India, has a place of business in India through agent, physically, electronic mode, and conducts business activity in India. That's how it is. So whether you have registered your foreign company, all those things, I think you will have to look at it. So those are questions you need to answer.
Okay. One question. Rule says that the edit log or the audit trail feature should be the feature that it cannot be disabled. Now, in companies where they have made in-house ERP softwares, in such cases, the complete control mechanism will be with the company itself. There will be no third party. So disabling feature would be there. So in such cases, how should it should be reported?
So if the entire control is with the company has to implement it. The problem is solved. Now question is, sir, what if the company goes and modifies? Right? In that case, that is where I said, the audit log should follow a concept called worm. Write once, read many. That means the moment it is written, no more modifications. First. Second, you could probably say, I have a risk that this audit log could be manipulated or altered. Then you need to test the controls over the audit log, meaning who has access to the audit log, who has modified. So you can have a log on that audit log itself. That's what I told you. A CCTV camera over the CCTV camera sometimes is necessary.
Okay. For GST compliance, big companies are using GSP, ASP solutions. Is audit trail required there as well?
Interesting question. I will go back to the definition of books of accounts. What does the books of accounts say? If it says sales and purchases, for that purpose is where it is essential. If your GST compliance software is only for filing GST returns, etc., I don't think it is mandatory, because it says books of accounts for all sales, recording all the sales and purchase of goods. I don't think it is necessary in that context. However, if that becomes your primary source of entry for various other transactions, yes, in that case, it may be necessary.
One question, not really for audit trail, but whether incremental backup is sufficient for daily backup requirements?
Incremental backup, is it sufficient? Yes, that is sufficient. But the challenge only, my dear friend, is in case of an incremental backup, you will have to see how you can enforce it. Because when an incremental backup, the typical schedule it works is, you will at least have one version of a full backup, and then it will keep on incrementally taking it. So tomorrow, should you wish to restore, right? Do I restore the first version and then take up all those incremental backup and do it? That's your call. Right? So if you look into a bank, what they do is some of the banks, right? Not all of them. Some of the banks, what they do, they only capture the incremental logs, but they merge it with the primary backup. So therefore, if tomorrow I have to pull it back, I can still go ahead.
Okay. Again, question which will trigger your definition of books of accounts. whether audit trail is applicable for minutes book or the company register, that is the secretarial records and
No,
all.
not at all.
Answer is yeah.
I think it's clear because the books of accounts nowhere mentions.
Yeah. As you said that if any service is outsourced, we need to verify that the third party service organization also has audit trail feature. How to verify that as an auditor?
I think I spoke of SOC report,
Yeah.
you getting access to them, you speaking, having a call with them and asking them to share some evidences. In absence of this data, you could probably even give a disclaimer. Or you could say that, certain key functions have been outsourced. We are unable to express our opinion on this.
Okay. I think that answers all the question. Mr. Parth wants to ask a question. He has raised his hand. I think he's lowered again.
So I have one suggestion. If you can spare just 2 minutes. See, all of us are actually a chartered accountant. Now we don't know much of technicalities in terms of softwares and all those things. So while we are doing audit and while we want to ensure whatever is the requirement of law, I mean, apparently I see we have no choice but to depend on the IT team, may it be of client or maybe we deploy somebody from our side. Now, under such scenario also, we being a principal being responsible to report, what are the precautions which one should take that even if we are when we are relying on the IT consultant of ours or maybe the client IT team, so that whatever data, the trail, the tampering, all those things which client has provided, is it sufficient enough to protect other than an auditor? If you can just throw light in couple
Good
of minutes.
question, sir. Good question. This is actually a challenge which we are facing with many of them, right? And this is where your documentation becomes very important. A and B is the understanding of the technological risk and you documenting that, because if you read SA 315 and 330, right, it says understanding of the technological risk is also part of the SA 315. And SA 330 talks about how auditor is giving response to that assessed risk. So this is also a significant part of it. So I think you will have to document it either in-house, relying through an external third party, or bringing that sort of expertise, right? B, ensure these documents are satisfying satisfying your regulatory requirement in such cases. If you are thinking of forensic audit and other things, there it's a complete different scenario. In fact, in forensic audit, some of the cases we have to ensure that the digital evidence, we have to create a mirror image and a hashing of that. Ensure that the original data set and the mirror image hash matches.
Yes.
And then you start working not on the original, but on the mirrored hash.
Mirror image.
Right? Because the original, you cannot tamper it. And so there are, again, there the trail becomes, even more serious.
So the practical tip here is that we need to have some IT team now onwards.
Some bit of an IT GC testing sort of a thought process, because otherwise I sense this becoming a little tricky area where lack of experience could probably result in this thing.
Yes, this is the
and
point
this
which
could
I
also
wanted to
imply
highlight.
that your cost of audit service also increases. But unfortunately, that's the compliance requirements and you'll have to adhere.
Yes.
Also,
Thank you so much.
being many practicing chartered accountants, they will be having different sort of clients using different software. So one of the query which one of the attendees is asking, that is there any kind of audit tool wherein it can be connected to the books of accounts, maybe ERP of the client, and
It will
it
evolve.
the result like that?
It will evolve. Currently, it is not there, but I'm sure it will evolve. The
Yeah.
reason why I'm saying it will evolve is because things have just started in the recent past, right? The requirement has just come up now. Again, within solutions like SAP and other things also, is there a click of a button I can do all these checks? I am afraid not, right? Because other problem or other challenges, the configuration settings differ from organization to organization.
Yeah.
I cannot have one size fits all tool which will settle. I can bring a program, right? I cannot run that configuration. Even though if I'm using Tally, it becomes a little difficult. But of course, we can see how Tally has it enabled audit trail and things like that. But that's another feature.
I think now all the chartered accountant has to learn basic SQL query and all that to at least get the basic data from the audit logs.
No, I think more than SQL, I think it's all about the perception of how data is maintained. You need not learn an SQL query, right? Because I've seen many cases, where so I am a second generation chartered accountant. My father came into practice. I think it's 43rd or 44th year of practice he's into. Even now, when he goes for an audit or any discussion, he asks a very simple question, and that gentleman gives an answer. Then he says, show me how this is done on the report. That's a very simple thing. The very fact that you're present at that place and generating and asking what is the column, how each of them comes, that is where the client already knows that, hey, this gentleman is going a little more depth into the report, rather not just taking my whatever copy. Today, for want of time, what we do is we say, boss, give me this, they extract it and give it, right? A small tweaking. Can I get access to this? Can I download it myself? So those are small nuances in terms of ways of working I think we should probably look at.
I think we are through with all the questions right now. If anything is there from the panel.
Yeah. So I think, thank you, Narsimhan. I think you have captivated the audience throughout your 90 minutes talk, and I think still participants are eager to learn. And I think though we thought that topic could be covered in 90 minutes, but after hearing you, we feel that it should be much more, or a half-day workshop is what we are thinking, that whether we should have it or not. But anyways, thanks for your time. I think participants have greatly benefited in the very crisp, covering both legal as well as the technology aspect. And I think I would request Deepak to propose a very hearty vote of thanks to you.
Thank you, Tejas Bhai and Chambers, for giving me this opportunity to give a vote of thanks to Narsimhan sir. So as we were reading from last year, listening about this audit trail, it was really the tip of the iceberg. And today we actually got to understand what is actual size of the iceberg after listening to Narsimhan sir. And again, it's an eye-opener. We actually know what we are dealing with after listening to you. And very beautifully you have designed your PPT. Very beautifully you have taken through all the pointers, definitely from legal point of view and the practical aspects also. And this has benefited to everyone, all the participants and us as well. So on behalf of all the participants, Chambers and us, we propose a very well-deserved vote of thanks. Thanks a lot.
Thank you. It was wonderful. Happy to be in touch regularly to discuss a lot more things on technology and accounting and automation. Probably we could do one session on entire thing on automation, accounting, how things are changing, connected banking. So a lot of things are there. I think we'll have to bring up that initiative of periodically having those sessions and having that conversation. I really enjoyed the time because I was also looking how to look into it, and many of the slides as I spoke I picked up those examples. So I think it was well received. Thank you so much. You have my contact details and credentials. If you have something, we could connect. Thank you. Bye-bye.
Sure. Thank you.
Thank you, everyone.
Thank you, everyone. Thanks a lot.